All right, so good evening, everyone, and welcome to this class of Introduction to Financial Accounting. All right, so this is going to take you through the basics of accounting and rise you up to corporate reporting. So today we start with the very basic of accounting. So we are talking about the introduction to financial accounting. All right. So maybe you are an SS senior high school student. It is useful for you. Maybe you are somebody having the feel of accounting for the very first time. This one is also good for you. All right. Because we are going to delve into the very basics of accounting. All right. So if this is the start for you, stay tuned and watch the series on my playlist on my YouTube page. All right. The name is Ansa Thomas. All right. Now, what is accounting? What is accounting? You want to know what accounting is. If we understand what accounting is, then it means that going forward, doing anything accounting wouldn't be very that difficult. So what then is accounting? When we say accounting, what does it mean? Well, accounting is a process, all right? So we see accounting as a process. And what does the process involve? The process involves recording business transactions. So in this accounting concept, the whole accounting that we are going to do, we are going to start with recording business transaction, and I'll explain it further. Not only do we record business transaction, after we've recorded the business transaction, the next thing that we do is to classify them. So we do classification. All right. So that is what we will do. Then after classifying, we will summarize. You will summarize. When we finish summarizing it, you analyze it and communicate it. All right. So that is what we are coming to do. That is what the whole accounting thing is about. So we are recording business transaction or financial information, classifying them, summarizing them, analyzing them, and communicating them. So this is the process we are going to go through. And I can tell you that doing the recording alone, the recording of business transaction takes like, the teaching of that will take a while, like 2 weeks. Classifying them will also take a while. Summarizing them will also take a while. Now, if you are doing accounting for the first time, the most important part you need to concentrate on is the basics. Do you know how to record? So that is where we will begin everything from. It's very, very important you get that. All right. So we will learn how to record. We will learn how to also classify. We will learn how to summarize. All right. Now, when we say that you are recording business transaction, the recording aspect of the accounting is what we call bookkeeping. This part is what we call bookkeeping. So what is bookkeeping? We are simply recording the transactions into the books of accounts. All right. So this side is just recording transaction into the books of accounts. So we will have to learn the books of account. So into the books of account. What is a transaction? Transaction simply means any arrangement or any dealing that involves some monetary exchange. So you give me goods, I give you money. So it's a transaction, all right? Anything that involves a monetary exchange, buying and selling, all right? Investing, collecting returns, anything, all right? So we will be recording that thing in the books of account. So we will learn the major books of account later on. But what you need to understand is that the concept of accounting involves recording transactions. and the transactions are recorded in the books of account. All right, so we will look at that. Then we will classify. Now, in the advanced level, the word classification means recognition. All right, recognition. And you are recognizing the thing into the element of financial statement. So we are saying that giving recognition to the element of financial statement. Element of financial statement. Elements of financial statement. There are basically 5 elements of financial statement. The elements of financial statement, you will see we will have assets, we will have liabilities, we will learn them, don't worry. We have what we call equity, what we usually call at the basic level capital. All right, so that is that. There are 5. The next 2 are called income and expenditure. So we talk about incomes. We also talk about expenses. So I will explain these things further in the coming videos. All right. So that is what you do. You capture for inclusion whether the thing is an asset. So you will classify them. How will you know the thing is an asset? We will get to know that. How will you know this is a liability? You get to know that. How will you know this is an equity? We will get to know that. How will you know this is income and expense? We will learn all those things so that you'll be able to do the classification. Now, after you have done the classification, then you are going to summarize the thing. You will summarize. When you are summarizing, that is where you are going to do something called profit and loss. So what we call the income statement. So you are going to summarize it into an income statement. You will summarize it into preparing a statement of financial position, which we also call what? Balance sheet. So this one is also called balance sheet. You will summarize everything in the balance sheet. Sometimes you prepare what we call cash flow, so statement of cash flow. Statement of cash flow. Again, we have the other 2, which we call statement of changes in owner's equity, statement of changes in equity, and the last one is the notes to the account. So this one is what we call the financial statement. All right, the financial statement is 5. We have 5 financial statements that we prepare. All right, so when you are doing it, you are going to do this. So, but at each level, you learn each one at each level. You don't learn all the 5. All right, and the last one of the 5 actually delve into what we call analysis. All right, so you are going to analyze the financial statement. You are going to do what we call evaluation. Evaluation, so that some people will understand. All right, some people will understand. If you put in the figures and you present, people may not understand. But what you need to do is to go on and explain what the figures mean. All right, so you do evaluation, and that is where you learn something called ratios and analysis. All right, ratios and analysis. So you will do that. You will do that analysis. All right, then the last aspect, after you have analyzed the thing, you communicate. So now you talk about it. All right, so you give information. It is called reporting. Reporting. So after you have done financial accounting, you will move on to learn what we call financial reporting. Then you will move on to do what we call corporate reporting. So that is the part you are communicating. Okay, so that is it. So this is what accounting is about. This is what accounting is about. Of course, you need to understand the uses of financial information. So that is the theoretical bit. There are people who use this financial information that you have analyzed. A typical example is the management of a business. Okay, so the management needs to know this financial information to know whether the company is doing well or what or not. The shareholders also need this financial information. They need all these things. Why? Because the shareholders also want to know whether the company they have invested their money into is actually making profit or a loss. Or they also want to decide, should they put in more money into the business? So that is part of the reasonability. Even employees are interested in the financial statement. Why? Because if the company is doing well, the employees is in expectant of collecting high salary or bonus. But if the company is always not doing well, then the employee might seek to leave. All right. So that is it. So the employee needs it. The banks also need it. Why? Because the bank, if you are going for loan, they need to know your track record. Yes. So your financial statement will give them information as to whether to provide you with the financial resources. All right. Again, it is very important to the government because the government also taxes you. The government wants to know your profit so that they can be able to tax you. So everybody is interested in the financial statement. All these things that I said is called the stakeholders of financial information. But that is it. From your beginning, your fundamentals, my purpose is actually to introduce the concept of accounting to you. Try and understand. It's not something that is really, really that difficult. So we pick it from here, then we grow together. All right. So basically, that is that. So accounting involves recording, classifying, summarizing, analyzing, and communicating financial information to the users. All right. So all these things that we discussed here, these 5 things that we have discussed here, we are communicating at the end of the day to the users of financial information. Users of financial information. Why are we communicating? Who are the users? Like I said, we have the shareholders, we have the management, and to each one of them, they need it for a particular purpose. Shareholders, we have the management, all right? We have the employees, all right? We have investors, because investors want to know if the company is doing well for them to provide their monies. We have the creditors, those who sell on the business on credit. They need to know if the company is able to actually pay their credits or give them their money back. So they are also interested. We talked about the GRA, the Ghana Revenue Authority. That is a representation of the government. All right, they are also interested. Okay, so these are people who are actually interested in the business. They are very, very much interested. Prospective investors, they are very much interested. To each one of them, I've explained to you why they need it. Now, why do we give this one to them? We give it to these people because they need to make a decision. So the shareholder needs to make a decision as to whether to give money to the business. All right, so he needs to think about it. That is basically what it's about. He needs to think about it. The shareholder needs to think about it. Management needs to think, find out how the company is doing, grow it, or leave it. So it's a decision they need to make. So the reason why we give this thing to these users is for them to be able to make financial decisions. Financial decisions. So it's for their financial decision making. All right. So basically, that is that. So this is the basic thing you need to understand about accounting. All right. You can compare accounting to other disciplines like human resource. This is financial accounting. So if you want to do some comparison, then stay in accounting. So if you say financial accounting, then compare it to management accounting. Compare it to tax accounting, anything accounting, all right, compare. You see the difference. But for financial accounting, these are the processes that you go through. So we will be looking at how to record business transactions, all right, do the books of prime entry, how to understand what assets and all these things are, all right. So that is that. Okay. So knowing this, the next step to do is to learn what we call the accounting equation. And this equation is the basis for all forms of accounting. All right. Now, this one, we will do it after we've done, you see this? the recording of transaction. How do we record? We will need to know some understanding. So let's pick up the basic thing, the accounting equation. It's a very, very basic thing, but the most important thing any accountant should know. So we want to look at the accounting equation. The accounting equation. We know accounting, but there is mathematics in accounting. There is a law also in accounting. It is more of law than even the mathematics, because the mathematics is addition, subtraction, division, and multiplication. But what is the accounting equation? When we say the accounting equation, what is it? The accounting equation is simple. The accounting equation tells us, or it explains to us, the accounting equation explains to us what an entity has. So the accounting equation provides explanation, or it explains what an entity, and by an entity, we will be looking at the various forms of them. We have the sole proprietor, we have the sole proprietorship, we have partnership, and we have limited liability company. So we will do accounting for all these people. Now, so it explains what the entity has. All right. So what an entity has. That is it. This aspect, what an entity has, is what we call the resources or the rights. What do we mean by rights? The power to do something, right? Yes. The legal basis for something. All right. So that is it. Accounting equation simply explains to us the rights, all right, or the resources. And not only that, and so it tells us what the entity has and who provided them. Who provided those resources? Who provided those resources or rights? Who provided them? So the resources an entity has, all right, these resources is what we call assets. What we call assets, all right. Anything the entity has in terms of resources or rights is called an asset, all right. Then we have, so you said that the accounting equation explains what an entity has and who provided it. There are two people who provide these things, two categories of people. The first one, we call them the equity owners, all right, the equity. So we call these ones equity capital. Equity capital. So sometimes we keep only the capital. Now, if the resources are provided by self, I mean this guy by himself, if it is these people, is the partners, right? If it is this one, is who? The shareholders. Your guess is as good as mine. So if these people provide the resources, then it means that we can categorize them as what? Equity. All right. That is that. Equity. Okay. But if the resources are provided by people that are not the owners of the business, then it means we are going to get it from those who are not the owners of the business. And that is what we call the liabilities. All right. So those we owe, it means that we borrowed the money. All right. So therefore, the accounting equation is asset, which is the resources, equal to those who provide it. All right. So now, for example, if I want 1,000 Ghana cedi cash, I can provide it by myself, or I can go and borrow the 1,000 Ghana cedis, or I can provide 500 cedis by myself and go and borrow the extra 500 cedis. If that happens, then it means I have all the things in the equation, meaning I have 1,000 cedis, but I provided 500 by myself, which is the equity, or you can say capital, plus which one? The one I went to borrow, and that one, we call them liabilities. So the accounting equation is asset is equal to what? Capital plus liability, or equity plus liability. So this is it. This is all you need to know. All right. So what we're going to do is to probably break down what an asset is, go deeper. All right. Then go deeper into equity, then go deeper into liabilities. All right. With each stage, we are going to learn how to do recording business transaction, which is what? Bookkeeping. Very important. So let's say I'm starting a business. All right. If I'm starting a business, so if I'm starting a business and I provided all the resources by myself, then it means that my asset will be equal to my capital. Is that okay? Yes, so that is it. Self-provided. If I am starting a business and I'm going to also borrow money from somewhere, then it means that my asset, which is my resources, will be equal to what? Capital plus the liability. So A, therefore, is equal to C plus L. Don't forget, another word for C is E, which is equity. All right. So that is that. All right. So it means that if I want to get equity, what will I do? Change of subject. I will move this one to this side and say A minus L is equal to E. That is that. If I want L2, I can do A minus E is equal to L. So this is the interplay, all right, of what you have. All right, so basically that is that. All right. So this is the accounting equation. You need to know the examples of assets then. You need to know the examples of liabilities. You need to know examples of equity. So we will be looking at these into details. All right. So try and get some examples of assets down. We will be asking those kind of questions in our next video. But before I leave you with this short explanation, I leave this recording from this explanation. What I'm going to do is to give you an assignment. What do we do? Let's say Kofi Mensah or Kofi Mensah started his own business with cash of 10,000 Ghana cedis. This is a transaction. It involves money. So how will we record this? So we need to know how to record this. Remember, the accounting equation has two sides. There is this left-hand side, and there is what? These two are at the other side of the accounting equation. They are on my right-hand side. So in every transaction, there has to be something in the left side and there have to be something in the right side to every transaction. So that is that. That is what you see there. There has to be, and that is what we call double entry. One here, one there. And we will be going deeper into that in our next video. So think about it. When I meet you, we are going to go back and revisit this. So I need you to get some understanding on what an asset is. We will look at it into detail. We will look at equity into details. We will look at liabilities into details. So this one, what is the name that is given to the money that we use to start business? Kofi Mensah started business. So let me cancel this. Started business with a cash of 10,000. So start thinking about it. We look at the double entry. And what is the name that we use to give to the money that we start a business with? Think about it. You can provide your answer in the chat if you watched it. All right. See you soon in my next video, and we will continue from there. Thank you. God bless you.